Hey guys, welcome to IBW Day 1. Really excited to be here on sharing few of the DePIN hardware, robotics, sort of economic things. And we've got amazing panelists with us who have built some incredible companies, some incredible businesses, and let's right hear it from them. So we'll start with a very short intro, like a 1-minute intro, and then you can say a couple of things which really stands out over there, which is like a differentiating factor, so that people recall, what exactly the project is. Yeah, we can start with you, Markus.
Yeah, hello. I'm Markus. I'm one of the co-founders of XYO. We, as a first DePIN, we launched our mainnet in 2018. That's before Helium and most others, and we are kicking around since then and are doing pretty well. And the reason that is because DePIN built something amazing, and it's a sustainable business model. So for us, it's almost 8 years. And as you might know, the World Economic Forum forecasts DePIN is going to be a $3.5 trillion market by 2028. That's in less than 3 years. And so I'm excited for you to be here and be part of DePIN.
Hey everyone, this is Dr. Prakash, co-founder of DeCharge.
Mic closer, Prakash.
Yeah. We are essentially building a DePIN for EV charging infra. Think of it like Airbnb for EV charging, but because a lot of EVs are being sold, but the gap between EVs to actual chargers are much lower. So we help to kind of democratize it through a very community-powered model. That is something we've been doing for the past couple of years. And we were the first DePIN project that was got into Solana Colosseum Accelerator a couple of years ago. And right now we have a lot of growth happening in India, specifically across 5 major cities, and also in the US. Excited to chat more about it.
Hi there, I'm Mike Horton. I'm the project creator and CEO of the GEODNET Foundation. GEODNET is building a spatial intelligence platform for physical AI. I think we all know AI is this massive market opportunity, but maybe it's not as well understood what physical AI is about. Jensen Huang, CEO of NVIDIA, introduced the idea of physical AI at last year's CES, and it's now, I think, really been accepted that this is the underpinning of how robots, self-driving cars, drones are going to work. And where GeoDNet comes into this is these devices need precise location services, and we're familiar with GPS, but GPS is not a useful technology for robots. It's not accurate enough, it's not precise enough. It's very old technology, actually. These satellites were put up in the late 1980s. So what GeoDNet has done is using DePIN and a community approach to put up a network of terrestrial base stations that provide a signal called the RTK signal, which is 100 times more accurate than standalone GPS. And that signal is the power that allows robots to precisely navigate the world and provide the incredible utility that robots will, how they will change our lives.
Hi everyone, my name is Gaurav. I'm CEO at GEODNET. I've been part of the industry for the last 15 plus years. From the last 10 years, I've been part of the AI ecosystem. I was part of the leadership team in Amazon, Booking Holding Groups, and Binance before this. And I've been working to basically move platforms toward the AI side from the last 10 years. And we basically saw that the AI growth is there, but there's a big bottleneck in the ecosystem. That's basically the compute part. Even if you have money, the access to compute is very, very limited. So we basically plan to create a decentralized platform around 2.5 years back to give power back to the builders. So we started our project 2.5 years back. We launched our mainnet around 1.5 years back on Binance. And with God's blessing, everything is good right now. Yeah.
Awesome. Now that we deep dive in, let's structure it in a way where people get to understand what are the fundamental sort of challenges, how did you guys overcome, and what the next steps are. So probably Gaurav, will start with you. When particularly in the DePIN segment, there's a lot of hardware requirement, either through compute or what with GeoDNet with devices or with DeCharge, things. So what are still some of the existing bottlenecks do you feel, primarily for a few people who are starting into DePIN segment, and how did you address them initially? What was that couple of great ideas that you fall, hey, if we structure it in this way, it would solve the technical hardware or sort of hardware capability issues, and how did you overcome around it?
To be be honest, the problems are very straightforward to solve. It's just the incentive of some players are so huge in this market that they never allow a new player to come in. For example, let's take a look at the CPU market, right? I was part of the AWS team 15 years back. It was $1 billion business at that time also. And they have become 15x from that time, AWS. At the same time, Azure has become like $1 billion business, Oracle has made a business. And in the GPU and the compute side, it's exponentially bigger. So the incentives are pretty huge. And I think the way we thought about the problem was that we knew that there are enough data centers in the world which have the same quality of hardware, same uptime, but they don't have the expertise in marketing or the software side of things. These guys are great at hardware management, but they're not great at software. So they're not getting the same visibility in the market, which they should. So we created this marketplace as a part of I/O. And what we did was very simple, honestly. We focused on 3 fundamental things. The top 2 ones were abstraction and orchestration. So think of it like when you talk about a decentralized network, and let's say you come as a customer to me, and you say, I need 50 nodes. And those 50 nodes are coming from 50 different cities. Managing that as an individual customer will become a nightmare. So what we did was we created an abstraction layer. So we built our platform on top of something which is known as Ray framework. And it's the same framework which OpenAI uses for like training their models. That's where we started. Second was we basically created a self-healing system along with that. Meaning if you have 50 nodes from 50 different cities, let's say one of the nodes is coming from Bangalore, and Bangalore for some reason has an outage. So our system will automatically find a nearby city and a GPU from there, bring it as a part of the network, and the system will self-heal, right? And user will not even come to know this is happening. And the third thing which we saw as a part of being the part of the industry was that the privacy and security was of utmost importance, which honestly not even the bigger players were addressing to it. So what we did was we created our product on top of containers. It's kind of a box that even if a data center gives me an hardware, I deploy that box and the customer is using that box. So data center also doesn't have a visibility into it. We basically focused on the boring things, the boring fundamentals, and that honestly worked for us.
Awesome. Mike, how about you? Given the GeoDNet's, sort of hardware requirements, how was the initial journey? How did you, ship out?
Well, I think that the power of DePIN is allowing the community to build, both in terms of supply, like putting up GeoDNet stations is a rewarding task. You can mine our token from doing that, but also letting the community build in terms of having affordable access to high precision technology. Prior to GeoDNet just hasn't been really available globally. Here in India, for example, we have over 1,200 base stations, which is more base stations than even the government network. And the government network isn't very accessible to developers of things like robots and drones, whereas our network is, and it actually has even better performance in most cases. In cities, we have more stations, so you get higher accuracy. So leveraging the community to build something is really, I think, the magic of blockchain, actually. It's the community aspect and the sharing of a difficult problem that's been very hard to solve. And then I think when you look at robotics in particular, robotics they are coming. The robots are coming, but without Web3 and blockchain, I don't think they can scale. And you look at like Waymo doing the self-driving cars in the US, they've put 20 billion plus into that business, and they're only operating in 5 cities. So for robots to scale, they need the community, they need all the services that blockchain provide, whether that's lowering the cost of development, whether that's infrastructure. These are both things that GeoDNet does in spades, but also privacy tech, regulatory, and leveraging the open source to build. These are all things that crypto is really good at aligning incentives around, and they're absolutely paramount to have robots come at global scale.
Awesome. Prakash, how about your business? Given the EV thing, which is exploding, and I think majority of the countries, adopting it, how hard was it to initially scale the infra and put it, across different things?
Yeah, that's a good question. So if you look at the earliest DePIN projects, it was to scale the incentivizing the supply side, because you build and you want the demand to kind of flow to you. Almost the good problem that we have right now is how do you adapt towards the demand side? So you move towards bigger questions like unit economics, what's the value accrual and all of that. But obviously early days for us, I think for any builder out there, it's very important to, even if you don't want to do hardware, you have to start somewhere, right? You buy off-the-shelf hardware, build your own software. That's what we did. Our main product is actually software adjacent, hardware adjacent software, which is actually valuable to a lot of businesses. At least even today, if you see, only 20% of our devices are our own devices. At least 50% above our community deployed. Which is great to see because community kind of knows what's coming because they don't need to wait for the token to come out and all of it, right? So it's great to see how it's kind of scaling, and for us, the next wave of scaling is towards the data layer, right? Mainly because I think energy infra is something that everyone needs. It's not just restricted to EVs, drones, robots, all of it are going to need somewhere to charge. So that's never going to change. So I think that's the purest form of currency that we definitely see. So I think we've scaled a very good model in terms of EVs, and I think we see a lot of potential in overseas markets as well.
Got it. Yeah, Markus, how about, XIO sort of thing? How was the initial, sort of challengings, and how did you overcome those?
Yeah, for us, like in 2018, we realized location gets easily spoofed or hacked, right? You download the GPS spoofing app and you pretend that you are in Delhi right now, but you're actually here in Bangalore, right? And it's a problem for most apps on your phone, but also for self-driving cars and smart cities and so on. The difference in GeoDNet, we're not about accuracy of location, we are about certainty of location. And so we built this IoT network, basically. And that was very difficult to scale. We tried to build all these partnerships with SK Telecom, South Korean Telco, and T-Mobile, and many others. And it was a 3-year proof of concept, and we were talking crypto slang. And then in 2018, only 2% of the population in the US, at least, used crypto. So it was difficult to explain what we were doing. And so we realized we need to simplify what we do. And so we launched a mobile app, for example, called Coin, which allows you to make your phone to a fully fledged IoT device in our network, which collects and validates and verifies data, and then puts it into the XYO network. And then, in addition, instead of earning XYO, you're earning points, which you can exchange for XYO, BTC, or ETH, but also for PlayStations and AirPods and sweepstakes entries and stuff people like, right? So, because the total addressable market of crypto is just too small for a lot of projects, right? If you want to grow, you need to find a very big market. Right? India is huge, right? But the crypto community is small. And so you need to find a way to talk to normal people as well. And we were able to do that. Now we have more than 10 million nodes in our network, I think, which makes us one of the largest crypto projects and DePIN projects out there. We have a lot of demand partners. We had $9 million in revenue last year as well, because you generate data, right, or generate whatever on the DePIN side, right, you need also demand, so you need to scale that as well. In the beginning, we wanted everyone to pay us with XYO because we were dreamers, right, and that didn't work, right, nobody paid us with XYO. Finally, we took US dollars, ETH, BTC, any currency anyone wanted to pay us with, right, and we turned that into XYO. We bought XYO in the open market and put it back into the ecosystem. Along the side, we burn some of our supply, right? We burn over time 86% of our token supply, and build a very sustainable, vibrant project and company. We are around for 8 years almost, and we are the first crypto company in the US which was qualified by the US SEC to do something. We have audited financials and filings and all the things. And so, like DePIN is awesome because it builds something real. And you are able to scale it a lot. India is our 5th largest market. I'm here to make sure it comes into the top 3 the next year or 2, and we are very excited to scale here in India.
Okay, awesome. Now let's move to a very interesting aspect of revenue and token price correlation. And this is from both the aspects. I was chatting with few retail folks last week, and due to the price, declination of Bitcoin, everyone's worried, what sort of tokens to buy or which will sustain, and what will happen in 2026. And primarily when it comes to DePIN, where as compared to the other, sort of sectors in the industry, less amount of startups, are built every day because of, all the challenges over there. So how would you correlate that equation, and how do you feel probably in next year the revenue that the protocol is generating and the price action, how is it going to be interdependent? Yeah, we'll start with Gaurav.
So I think one thing which is very different and great in DePIN is that this is one segment of the business which will really bring the adoption from Web 2 to Web 3, which the crypto was aiming for. Like for example, let's take today a lot of chains that are being built. These are L1, L2 chains, right? They'll do great, but they'll do great during the boom time. When people are trading, like for example, there are chains when people are doing meme trading, they have a lot of transactions happening. The moment market will go down, the trading will stop. They'll become ghost chains. There's no revenue. On the other side, DePIN is one segment where the usage would be there irrespective of the cycles. So for example, when we do the business, in past 6 months itself, we have brought like $25 million plus as revenue. That is irrespective of the cycle. Whatever happened, the revenue is coming in, and that revenue is just growing up, right? That's one. The second thing is, in any market, there are emotions, right? The reality is, I was just talking to Mike off stage, the reality is that whatever Bitcoin is doing, it's doing, right? But the altcoins as a market overall, if you remove the Ethereum and Solana of the world, right? We've been in bear market from last 1 year already, honestly. You see some pumps here and there in some coins, but if you take it as a group together and you take a trend, we've been in downtrend from last 1 year. It's just a reality of the world. Like every segment of the business goes through it. We're going through that hard time, but we'll come back from it, right? But when the good time will come, I'm extremely confident that there is a maturity which is coming in the industry, and the maturity which is coming in is that when the revenue is coming in these businesses, how they give back to the customers. For that to happen in the first place, there should be revenue in the first place, right? And DePINs are one of those products which have the revenue right from day one. Because all these products which we're talking about, they're not theoretical projects. They have products which the customers are lined up already. So we have just not a theoretical use case, the customers there. That's why we were able to bring the revenue also within the first 6 months, like 20 million plus, right? So we are in a very lucky place that the customers are there, the revenue is there, we'll give the feedback. The moment the sentiment is back, the altcoin starts to come back up, I'm extremely confident DePIN and AI will be the very first industry which will rebound with like aggression.
Awesome. Yeah, Mike, Blockworks mentioned that, and the data, on-chain data, GEODNET is like in the top 4 revenue generating customers on that. But if you see the price movement when the retail asks, hey, we are getting like 12 geode every day, how's the balancing thing? So how do you counter it?
Well, I think in the short term, it's hard to understate how kind of crazy the Web3 valuations are and how detached from fundamentals they really are. I think the maturity issue is really there. The fundamentals haven't really entered in as a major factor, but they will. And I think many of the current projects that have gone through different cycles are going to have a hard time as fundamentals become more important. Not everything needs to be an exchange. Not everything needs to be a trading platform. Perps are interesting, but it's just a form of gambling, let's be honest. And Las Vegas and gambling as an industry really just isn't that big. AI is going to be the market that is the market of all markets. It's going to absorb all technology markets. It's going to be hundreds of trillions of dollars, if not eventually. I think physical AI could actually even hit to a quadrillion-dollar level. So these are real, sustainable, durable revenues that actually build on the technology of blockchain as opposed to just being means of shuffling money back and forth and kind of gambling. So we're building real infrastructure for real use cases to power real robots, and this demand is about to explode. And you can, be early in that cycle and take advantage of the fact that crypto markets don't understand how to value projects, or you can wait. And I think that's a choice that ultimately, though, will bear out, because physical infrastructure is a real thing. Like you build roads, that promotes commerce. You build airports, it promotes commerce. We're building the cyber equivalent of that. We're building the infrastructure to power robots. And it's, I think, just an inevitable thing that everybody should understand now, that these technologies are coming, and they're coming at us fast. I think Elon talks about it as a tsunami, and I believe he's correct on that.
Awesome. Yeah, Prakash.
Yeah, I think, just to rephrase the question, so basically, in down bad markets, how do projects kind of showcase their metrics like data or revenue? Yeah. It's a good question, mainly because I think, like Gaurav mentioned, we have actually been in a bear market for quite a bit of time. I think what's really important is to respect the retail. When I say respect the retail, it's like, who are the retailers? There are a lot of people who want to invest in projects, even in the down bad situations, right? They want to see something that's closer to ground reality. Even if you see some of the latest token innovation for fundraising, Futarchy is one very interesting model where you give the governance rights to actual holders of the projects. This is actually great. A lot of projects which that model kind of existed before because they are tired of being extracted. So I think crypto is actually one of the lucky sector where you can actually focus on both growth and revenue. Because when light goes out, then you have only revenues to focus on, and I think that's very important. With the traditional world, you can only pick one. So I think that's something, that's an opportunity that we have. That's something really exciting. So when the retail wants to look at projects, they will look at these things. What is actually happening? Is this project closer to the ground reality in this particular domain? That's when they decide to buy. So I think that's how the value accrual will kind of shift for all projects. So I think that's what everyone has to adapt towards.
Okay, awesome. Yeah, Mark.
Yeah, I think token valuations don't matter that much. They matter for investors, but not for long-term projects like ours, right? If you prepare for the robotics and AI revolution, for example, our projects are primed, right, to take advantage of that. So a bear market right now doesn't really matter, right? If you then take advantage of the hundreds of trillions of dollars which are in those economies. And the next bull is going to come, you know, like our token was at a $1.1 billion market cap, then it went to 100 million, then it was at 500 million in last December, and it jumps around, right? And that's just how crypto is right now, but it's going to mature over the years, right? And then you want to be there and make sure that you're either a project yourself, you know, or maybe an investor and be part of that revolution, or someone who runs some stations and knows for DePIN networks. And we have an amazing case study. You know, we have our top 500 users. They earned together $14 million. And they did that, right, because they were able to accumulate assets, and then, you know, they held onto these assets, and as our token, XYO token appreciated, right, suddenly they had value. And this is really what's fundamental here. It's like DePIN enables people to earn assets, right, while most people are employees, right, so they earn money, are very dependent on their jobs, right? They might get fired there, live paycheck to paycheck, and usually don't have many assets, right? And DePIN allows you to accumulate assets, right? And those assets can appreciate in value. And right now, it's a good time to accumulate assets, right? Because the prices are low and it's pretty cheap.
Awesome. We'll come to a very interesting point, which is very close to my heart, on stable coins and how DePIN, you know, is leveraging that sort of thing. So Mike, yesterday when we were walking, you said an idea where robot would be here, a decentralized robot. Anyone could pay with stablecoin, and it could probably sweep the streets or, you know, any particular location. And there are so many exciting use cases, you know, which could be unlocked with robotics, DePIN, plus AI element, you know, which is coming in. And one other part of Web3 is new narratives, you know, sort of every cycle is coming in. 21, it was roll-ups, perps, you know, DeFi sort of thing. This last year has been like Web3 AI, stable coins, you know, coming up with all regularity, and probably next thing. And a lot of these protocols utilize other, you know, sort of infra which is already being built and then, you know, moves ahead. So my question is, like, the hottest themes right now, robotics, stable coins, and probably AI, how do you see the interface of it's happening? And are there any use cases which your project is already doing? Can you share some insights, you know, on those?
Yeah, I think it touched on a couple points. I think in general, robots are going to have to interact with the blockchain in many, many new ways. And blockchain is really fundamental technology to build safe, just, responsible, reliable, and kind of mature robotic technology. So I think that's a huge point. And they're not going to be able to transact with infrastructure in a pure centralized way unless we end up like just all slaves to some Borg, which with robots, because they're physical and they have, you know, that physical power is particularly dangerous in a dystopian view of the world. So we're doing important work to build that infrastructure. I think one of the novel things that's about these real-world projects and their interaction with stablecoins is that because you're able to like mine GeoDNet, right? You put up a base station on your roof and you start mining GeoDNet. So a gas station owner, this is something that Inflection, a company Pratik's involved in, is actually demonstrated as a real thing. So they're running a GeoDNet base station on a gas station. He's getting the GOD token. He can transfer that to a stable coin, and he basically becomes a little miniature bank, right? Somebody can come in with Indian rupees and hand it to him and get stable coins back. So it's like a peer-to-peer on-ramp. This is a really powerful, like fundamentally very powerful social construct related to ownership, relating to not being in a context where everything is owned by somebody else and everything is extracted from you, that you are participating and earning a token by providing infrastructure for robots, and at the same time, that enables you to take on a banking function. That's incredible power handed back to citizens. I liken it to the speaker here that was talking about, you know, Bitcoin as being such a social thing. It's really true. I mean, the democratization that can occur through Web3 is unparalleled with any other technology.
So I have a different opinion on this, right? Are stablecoins great? Absolutely is, right? Do they give power to a lot of people in the third world countries where there's a lot of inflation in the currency? Absolutely is. But as a builder, I've seen people making this mistake by going all into the stable coins and the usage of that. And the reason is very fundamental, right? Let's take a practical example. If I collectively take the whole demand of the crypto industry overall, how much compute they need, it'll be minuscule. Like that kind of a business I can get from a medium-sized company out of Bangalore itself. That's just a reality, right? If I start forcing my customers to pay me only in stablecoin, the reality is like the crypto industry is still not that huge. Like there are a bunch of enterprise, like when I was moving out of Binance, right? I had some interviews in big companies in Europe, and they were asking, what is Binance? Like, it was at that level. And they're like, big companies, you're talking about Binance, right? So that's kind of exposure people have to the crypto industry. That's just a reality. Right? So, and if you go with the stable coins, crypto, and you try to make business in the Web2 side, they'll take a step back. So you're shooting on your foot. So the reality is when you want to make a business, you have to build a business in a way that customers can pay you any way you want. Be it a stable coin, be it from bank, any way possible. And you have to make it seamless for them to use your platform. If you don't do that, you for sure will not have an exposure to your business the way you could, right? That's a hard learning which we got from last 1 year. Second thing is like within the ecosystem, in the crypto ecosystem, right? When we, let's say for example, I use Pith network for multiple things, right? Between our protocols, should we use stablecoin? Absolutely yes, right? But blindly going all in, just because we are a crypto platform, I think you can do yourself injustice rather than helping the protocol in the crypto industry overall.
Makes sense, yeah. Prakash.
I think it boils down to building something what people want. Do people want another stable coin? It really depends, right? For builders, having to create a distribution layer for projects, I think that's interesting. I mean, to me personally, stablecoin is the boring but actually interesting layer, mainly because if you want to have, let's say, automation happening at a physical level, right, of machine-to-machine interactions and all of it. Even take the example of, let's say, Waymo. They have self-driving cars, but they don't have automated charging system. That's only possible when the innovation around machine-to-machine transactions are really mature. That I think there is no winner-takes-all market. So I think if you're a young builder wanting to build on something extremely innovative, go for it. But otherwise, I think it's very wise to focus on a very boring but massive value accrual layer over time, right? I think that's what will be very interesting.
Just a curious question. So when if I have an EV car and I go at the DeCharge EV charger, can I pay with local currency and stable coin both?
It doesn't matter, right? We optimize for the what people want. Right now, fiat, stable coins, it doesn't matter.
Okay.
Obviously, as a builder, like what we try to do is, what's the value accrual we want, right? You incentivize them, give them better discounts. It's like how traditional payments work, right?
Okay.
You build the distribution by creating like an incentive layer, and I think crypto has a very good use case for that. So that's something we have been doing already, yeah.
Okay, awesome. Yeah, Markus.
Yeah, I think stablecoins are revolutionary because they fill this gap crypto has. You know, crypto wanted to be this method of payment, but as we see, it has a lot of volatility, right? And with that volatility, people are scared to lose their assets, right? If they get remittances, for example. And so they trade out of their Bitcoin or ETH or XYO or whatever. And so it's good to have these stablecoins so that you have some stability and you're not as exposed to the market. And as you have more and more stablecoin adoption, I think it will be much easier to accept it for an EV charging station or for anything else. And with all the stablecoin innovation and new regulation, I think there's going to be new competition, and with that, you're going to have more innovative stablecoins. Stablecoins, for example, which provide yield. Right now, the yield goes to the stablecoin project or stablecoin company, right? But that's about to change, I think, right? Because the stablecoin which makes us, the community, that makes most money, right, will be the best. And that's the same if you have stablecoin payments between robots and automated systems. I think, you know, all those payments between, let's say, a smart city, let's say, right, roads, traffics, right-of-way negotiations, these kinds of things, it's all going to be run on stablecoins, I think, rather than the regular utility tokens of our projects.
We also have to take the audience questions, but before that, we'll summarize. Can you tell 2 things that you're really excited in 2026 about your project, and also a prediction by next IBW, what would be the Bitcoin's price? So 3 specific answers, and we'll make it quick.
For me personally, being an engineer, the open source models are being created. I'm super excited about that. Like every month, there's a new model which is getting launched, better than the previous one. And very surprising for me, which actually gets me excited also, is these are happening from our part of the world, right? Like they're like models being created out of China, India, UAE, and which are among the top in the world, right? And for whatever reason, good for the community, they've made it open source. So you can look into it, how it's working, what the architecture is, and you can make it better. But that is something which I'm very, very excited about, because when we are giving our compute and services to a lot of builders, they're building on top of these open source models, and there's a lot of contribution back which is happening to the ecosystem. And I've never seen this kind of behavior in our industry in past. That is something which is like very refreshing to see.
Okay. And also Bitcoin price prediction by next IBW.
I can tell you, like, I don't think the cycle is finished. I believe I can give you like my prediction how I'm investing.
Just your prediction.
I believe we struggle for next 10, 12 days.
Okay.
Like, because I always invest thinking of a market maker.
Okay.
So what I do, if I have to run the market up, I basically get everybody out. So my assumption is that next couple of weeks, things will be shaky. December we go a bit up, maybe 100, 110. And then January will be up, Feb down. I think we'll start to have a bull cycle, maybe March, April.
Okay.
That's the way I am personally investing, but
Okay.
like, if I would have known everything, I would have been like a multi-millionaire.
Yeah, right. Predicting markets is not a fun business for most of us, but definitely robots is the thing I'm most excited about. And I would say for the Bitcoin price, my guess is it'll be around 125K. I'm not that bullish on a short-term like explosion to $1 million, but it'll get there eventually. But maybe 125K.
Okay. And Geo to
By when?
$1?
By when, Mike?
By the next cycle, next IBW.
By next cycle, 125K. Yeah?
By IBW next year, 125K.
And Geo price?
Well, that better be. That I'm much more bullish on, to be honest with you. I think the revenue growth is really strong. A lot of things are going to break for us in 2026 with us really delivering like in robotic platforms built specifically around GEODNET. So I'm very bullish on that.
But honestly, like coming back to it, I think anybody who's investing, if you basically have a 5 or 7 year view, I think this is the best like investment to do. There's no reason why we are not 5 times from the way we are, honestly.
Yeah,
like
I mean, the
time
undervaluation in DePIN is absolutely insane, actually.
Like these are the best times, like in crypto, be it altcoin, be it Bitcoin, to invest, honestly.
Nice, yeah. Prakash, we'll make it quick. We have to also get audience questions. Yeah.
I think as long as the floor of 100K is there, I think ecosystem will do well.
Okay. And DeCharge token coming?
Next IBW, yes, it'll be
Next
live.
IBWS. Okay. Yeah, Markus.
Yeah, I'm also excited about our recently released XYO Layer 1 blockchain. It's the first data-focused blockchain built from scratch. You know, it's not forked from anywhere else. It's focused on data. It's super efficient. Check it out. If you want to build on it, send an email to partnerships@xyo.network or grab me at lunch probably next. And the Bitcoin price, I'm closely aligned with Gaurav there. I think the market's going to recover at the beginning of next year. I think maybe with the new Fed chair in the US, there's going to be excitement in the market and a lot of interest rate reductions, and that is going to put risk on again and probably brings crypto prices back on.
Okay, awesome. We'll quickly take audience questions. I think we have just time for 2 of them. Yeah. Any audience questions? Yeah, Ajay.
So this is for Mike.
Ajay.
This is
Yeah.
This is for Mike. So how do I attach my robot into your network? How easy is it?
Oh, it's, if you have an existing robot that supports, there's an international standard for precision location called NTRIP. So if you have a DJI drone, for example, you can just connect it through the DJI controller. So it's very easy. If you have a tractor that supports auto steering, it's very easy because there's this international standard. I think what's going to be even more exciting is we're coming out with a platform to actually build robots, and this is very important. There's a lot of centralization in robots today, and the centralization is China. China has really emerged as the absolute leader in the development and manufacturing of robots, but through the power of our platform and a lot of interest in around the world, I think that's going to change. I think there's going to be a lot more people entering into the production and scaling, including the United States, Western Europe, hopefully India as well.
Okay, awesome. I think we've just finished right on time. So thanks guys for coming in and sharing your thoughts. Looking forward.